Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this part, we'll talk about trading strategies, risk management tips, and alternatives to leveraged ETFs. Who should consider leveraged ETFs? Leveraged ETFs like TQQQ aren't for everyone. Their turbocharged returns come with high volatility, making them a poor fit for buy-and-hold investors. Instead, they shine in the hands of traders who understand their mechanics and can handle the risks. Day traders and active investors. If you live for fast-moving markets and check charts multiple times a day, leveraged ETFs might suit your style. Here's why. Short-term focus. These ETFs work best over hours or days, not weeks. Their daily reset means holding them long-term introduces unnecessary risk. High liquidity. Funds like TQQQ trade millions of shares daily, letting you enter and exit positions quickly. Trend exploitation. In strong directional markets, leveraged ETFs magnify gains better than buying individual stocks. The catch? You need discipline. Set strict stop losses and take profit levels because a sudden reversal can wipe out gains fast. Hedging strategies for advanced portfolios. Some experienced traders use leveraged ETFs as tactical tools, not just for speculation. Examples include short-term downside protection. Holding SQQQ 3x inverse NASDAQ as a hedge during market pullbacks. Pairs trading. Balancing a long position in QQQ with a short-term TQQQ trade to capitalize on volatility. Sector bets. Amplifying exposure to tech without picking individual stocks. This isn't beginner territory. To use leveraged ETFs effectively, you'll need a solid grasp of market structure and risk management. If you're comfortable with rapid price swings and have a clear exit strategy, these funds can be powerful. But if you prefer a hands-off approach, steer clear. The market has cheaper, simpler ways to grow your money. Practical strategies for using TQQQ. TQQQ can supercharge your returns, but only if you use it the right way. Forget blindly chasing gains. Success with this leveraged ETF comes down to smart position sizing, tight risk controls, and timing your entries like a pro. Here's how to trade it without getting burned. Position sizing and risk management. The golden rule with TQQQ: never bet more than you can afford to lose. Because of its 3x leverage, a small move against you can quickly turn into a big loss. Start with these guidelines. Risk per trade. Limit TQQQ positions to 1 to 5% of your total portfolio. Even a 10% drop in the NASDAQ means a 30% swing in TQQQ, so keep trades small. Stop loss orders. Set hard exits at 5–10% below your entry point. Letting losses run is a recipe for disaster with leveraged ETFs. Diversification. Never go all in on TQQQ. Pair it with less volatile assets to balance your overall risk. Remember, TQQQ rewards patience, not in holding it long-term, but in waiting for high-probability setups. Missed a rally? Don't chase. Another opportunity will come. Timing the market, when to enter and exit. TQQQ works best in trending markets, not choppy ones. Here's how to spot the right moments. Strong uptrends. Buy when the NASDAQ 100 clears key resistance levels or bounces off major moving averages, like the 50-day or 2-a-day. Avoid using it in sideways markets. Volatility decay will eat your gains. Oversold bounces. After sharp pullbacks, TQQQ can rebound fast. Look for extreme RSI readings below 30 or bullish reversal candlesticks. Exit signals. Take profits when the Nasdaq shows exhaustion, like a bearish engulfing pattern or overbought RSI above 70, or trail a stop loss to lock in gains as the trend continues. One last tip. Watch the VIX. When volatility spikes, TQQQ's swings get wilder. Sometimes the best trade is no trade. Wait for calmer conditions if the market feels too erratic. TQQQ isn't a set-and-forget tool. It's a precision instrument for traders who respect its power and know how to handle it. Alternatives to leveraged ETFs. Leveraged ETFs like TQQQ aren't the only way to target big returns. If the risks of daily resets and volatility decay give you pause, there are smarter, more stable ways to play the Nasdaq. Traditional ETFs, options, and futures can give you similar exposure without the same level of stress. Let's break them down. Traditional ETFs, QQQ versus TQQQ. QQQ, the Invesco Nasdaq 100 ETF, is the plain vanilla version of TQQQ. No leverage, no daily resets, no volatility decay, just straightforward exposure to top tech stocks. Here's how they compare. Risk profile. QQQ moves 1x1 with the Nasdaq 100. TQQQ adds leverage, which means triple the gains and triple the pain. Holding period. QQQ works for weeks, months, or years. TQQQ starts breaking down after a few days. Fees. QQQ costs 0.20% annually. TQQQ charges 0.88% due to its complex structure. QQQ won't make you rich overnight, but it won't vanish in a downturn either. If you're bullish on tech but hate sleepless nights, this is your baseline. Options and futures for leveraged exposure. Want leverage without the baggage of a leveraged ETF? Options and futures let you control big positions with less capital, and you decide the time frame. Options pros and cons. Flexibility. Buy calls for upside or puts for downside with expiration dates you choose. Defined risk. Selling spreads or buying puts can hedge your portfolio without daily resets. Complexity. Requires learning about strikes, Greeks, and assignment risk. Futures pros and cons. Pure leverage. Nasdaq 100 E-mini futures NQ offer 5x10x leverage, settled daily like ETFs. Tax efficiency. Futures get 60-40 long-term, short-term capital gains treatment. Margin calls. Unlike ETFs, futures force you to post more cash if the market moves against you. Options and futures take more work than ETFs, but they're powerful tools if you know how to use them. The best strategy depends on your risk tolerance. If you want simplicity, stick with QQQ. If you're skilled with derivatives, options and futures offer more control. Leveraged ETFs sit somewhere in between, convenient for traders, but with costly quirks. Leveraged ETFs like TQQQ pack serious punch, turning small market moves into big gains or steep losses. They're built for short-term traders who understand the risks, volatility decay, high fees, and the danger of holding them too long. These funds aren't passive investments. They demand attention, discipline, and a solid exit plan. If you're drawn to the potential of 3x returns, treat TQQQ as a tactical tool, not a buy and hold bet. Use strict risk controls, stick to trending markets, and keep positions small. Better yet, talk to a financial advisor before jumping in. The market will always offer opportunities, but protecting your capital comes first. Ready to trade? Start with a clear strategy and never risk more than you can afford to lose. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.